Så er det blevet tid til, at vi skal slå over på engelsk. Vi skal lære en handelsplatform at kende, eToro, som er kommet på det danske marked inden for de sidste 4-5 år, og som har fokus på retail-investering, på vores allesammens ageren, copy trading. Det skal vi også høre om. Så med mig her på scenen, der får vi Chief Investment Strategist Gil Shapira fra eToro. Og lad os lige først få ham ind med en ordentlig sang, hvis jeg ellers kan finde ud af det her. Sådan. Værsgo til Gil Shapira.
The slides.
Yeah, I like that one. That was a little bit presidential, like.
It is.
Now we got the president. Jill, thanks a lot for being here.
Yep.
I'm happy.
Pleasure to be here.
Yeah, that you would join us, and I actually negotiated with Gil and his team that we will have some news on how the market reacted and what happened after the election, international, but also learn a little bit about eToro and the platform that most of us have heard about, but maybe that many doesn't know yet. So Gil, take it away and just give us a little bit on eToro for the beginning.
Yeah, amazing. So first, thank you, everyone. It's great to be here. Am I the only session in English? I feel very special. Yeah. Amazing.
Just take my phone.
So just a few words about what eToro is. eToro is actually the biggest global investment social platform in the world. What does it mean? It means that alongside with investing in thousands of stocks and ETFs and cryptocurrencies and commodities and indices and pairs of currencies, you can also have the social experience. What does it mean, social experience? You can see what other people are doing. You can ask them questions and also to see their analysis and to decide whether to copy popular investors. So as of now, we are running more than, thank you, Trump, more than $12 billion assets under administration. Most of our clients are UK-based, European-based. We have also presence, you can see it in here, in South America, North America, Asia-Pacific. We are active in 75 countries, 3.2 million funded accounts and growing. And one of the countries, by the way, Denmark. Okay, so we have a really nice presence in Denmark. And the fact that we are leading retail investors means that we have responsibility, and we analyze the impact of retail investors and the meaning that they are more involved in capital markets. What does it mean? Just to give some highlights about what we are going to talk in the next 20-25 minutes. So democratization of capital markets, the ability to be exposed to both local and global equities. The fact that people are less home biased and they are more aware of latest trends and like to educate themselves to read content, and the increasing usage of the social element, which I just talked about, which is copying popular investors.
So you had your heydays under the COVID, and I mean, that was really when younger investors went into the market. A lot of growth came in, and you had your growth as well as eToro, as a platform in those days, right?
Yeah, it's fascinating, the ability to see many, many retail investors opening accounts and trading and investing for the long term. And based on that, we do some surveys to understand what they are doing, what they are thinking. So just to show you this slide, which represents the fact that we see growing consensus among most generations to increase investment in stocks, okay? So this is a quarterly survey that we run. We ask many retail investors, what are they doing compared to previous quarter? And we have seen, this is a survey that we run in the last quarter, and we've seen that in pink you can see increasing of holding local stocks, and in green you can see increasing holding international stocks. So what it means that people are more investing in both local and international stocks. Why is that so important, Mikhail? I want to talk about that. Because if you are diversified, if you are open to more stock exchanges, it means that you have, in general, I would say, higher probability to increase your wealth. And I want to show you this one. This is a slide showing what if someone took, in the year of 1819, okay, $100 and investing in main asset classes, okay? So for instance, in the light blue line, you can see $100 in 1819, investing in real estate. Don't know what exactly you can buy. I guess the whole neighborhood, okay, 1918. So nowadays it's worth more than $2,000, okay? Gold, which was an amazing investment, by the way, this year, $100 worth 21K, okay? Bonds, a bit more than $30,000. And investing in S&P 500 worth over now almost $100,000, okay? So it means that investing for the long term in stocks, the ability to understand how stock markets work pays off. And another interesting thing that I want to show...
I would say that this crowd have learned that, you know. They are already inside, but that's good, you know. That's good knowledge, and yeah, thanks for that. So,
and let's talk about latest trends, okay? We know the AI revolution, right? And who is the pioneer of the AI revolution? Name of the company? NVIDIA. We know NVIDIA, right? So what we did is we checked, actually, Michael, how much NVIDIA is popular among eToro investors. And let's see this amazing slide. You can see here that in France, Spain, Italy, this is the most popular held stock by investors, local investors. UK, it's number 2. Australia, number 2. Ireland, number 2. Denmark, number 2. What is the most popular Danish stocks? With Danish? You said Novo? Novo. It's not the answer. What is number 1? Number 1 top popular stock by Danish investors.
In the eToro account or in
eToro accounts.
Okay, yeah.
We have many of them. We have tens of thousands of Danish clients at the moment. What is the top popular stock for Danish clients? The new bestie of Donald Trump, Tesla. This is a correct answer, yeah. So definitely the most popular stock, it just increased 35% the last week, so it means that very well done, Danish investors, okay? So basically, this generation is much more knowledgeable, like to educate himself, and fully aware of latest trends.
Yeah, and my generation and the generation with me here, maybe we should learn a little bit. That's also what you are here for. So take it away and give us some more inspiration on what's up on your accounts.
Yeah, so now I want to talk maybe about, I hear some questions about what is the meaning to open capital markets to everyone, okay? It means that if you don't know capital markets, you can do some mistakes, right? So, and social channels are an initial part of our life. We do many things in social channels. If you want to book a restaurant, you go to an application and you type the name of the restaurant or try to find for a recommendation and you book a place. If you want to go and book yourself a hotel, you use, for instance, booking.com, right? If you need a plumber, if you need an electrician, what do? You write in your family WhatsApp group, do you have any recommendation of a plumber, so and so and so, and you get a name of someone. So it means that we use social channels everywhere, and also when it comes to money. We just talked about how much it's improved our life. We have a better chance to increase our wealth, but it is also come with high responsibility, right? Because if a client opens an account at eToro and loses 50% of his money, her money, after 1 week or 1 month, it's not good. This is not a happy client. We want to support those clients, okay? So that's why it means that we need to invest a lot with education, a lot regarding content in many languages. So you can see here, we opened a year ago, Michael, the eToro Academy, in which we shared more than 2,200 different articles and podcasts and webinars, and with many languages, by the way, in which you can read, in which you can educate yourself regarding capital markets. We also have podcasts and webinars talking about that. which is something that we truly believe we need to invest in order to help people to know how to invest.
And you also have bought some memberships in our Danish association, shareholders association, for your gold clients, so to speak. So you have also supported the more old-fashioned, maybe, the magazines and the way that we also do it. But you are very much into trying to not only inspire but also educate.
Definitely, definitely, yes. Yeah.
Okay. So if we then take it a little bit further, copy trading is one of the things that, at least the name, we've heard it. What is it all about, and why is it so important with you?
So what does it mean, copy trading? Let's talk about the functionality. It means that, for instance, let's say you are a popular investor, we'll define it soon, and I am a client of eToro, and I have $10K in my eToro account, and I want to copy you with my $2,000, for instance. It means that when I copy you, after I see your portfolio, your picture, your bio, I'm impressed by your past performance, I can take $2,000, copy you, which means that my $2,000 will be fully allocated with the same proportion as your portfolio, okay? And whenever you do another trade, I do the same trade automatically, right? So I get a full reflection of what you do. Now, in eToro, you can copy popular investors. We have, it's an elite group of 3,200 popular investors, which is 0.1% of our funded users. So not everybody can be copied without any limitations. And this group is actually, needs to meet some specific criteria. One is risk management. We don't want many people copying someone and this person decide to invest 100% in something dangerous without any responsibility. So it means that you have to go through specific risk management and to be diversified. I want to show you an example of the top 10 held assets by this community, popular investors, just for you to learn about, in general, what they do. Okay, so you can see here stocks like NVIDIA, Microsoft, Meta, Google, so tech leaders. You can also see cryptocurrencies, the big ones, Bitcoin, Ethereum, Solana, and you can also see number 9, TSMC, which is the giant company from Taiwan, and also Apple. So very diversified offering, which means, which gives you some indication of what this community actually does. Now, we said number one rule in order to become a popular investor is to be diversified and to monitor your risk. Secondly would be in terms of transparency. Just imagine your pension fund or your provident fund, what are the odds you know who the person is? What exactly his current investment philosophy, okay? Usually we don't know that. We get a report once a year or once a quarter, whatever, okay? And we can learn about what happened a year ago or a quarter ago. To become a popular investor means that I need to be fully transparent with the community of eToro. I need to see the face of the person. I need to see his portfolio. And just to give you 2 examples of 2 Danish popular investors. The first one, I think that some of you are aware of this person, Jeppe Kirkbond, okay? So if you get into eToro platform, you see this person. You can see his face, you can see his past performance from the very first year when he joined eToro in 2013. You can see also his current portfolio, okay? What this person holds. You don't have to copy him. You can copy him, but you can learn from this person what this person holds. So for instance, Jeppe holds, according to November 6th, which was last week, okay, 55 assets, and this is the top 10, okay? You see NVIDIA and TSM and IBE and so on, so many assets. So this is one example of how popular investor behaves. Second one is this person, Christian Jane Hongsted. This is a real person.
He's out there in the...
He is here. Christian, are you here?
Oh, yeah, he's down there.
Christian, you look amazingly like yourself, I must say. Okay? So this is Christian, and this is Christian. This is the same person. Okay? So you can go also and see Christian's past performance. You can go and read his bio, what his philosophy. Okay? Christian believes in tech companies, for instance, and more, and he does his own analysis, and you can read that, and you can also see the top 10 holdings and all of the holdings by Christian, and upon that, to decide whether you want to learn from it, to copy him, or to do other things, and also you can chat with Christian, sending questions and get answers.
So if some of us should consider this, would that be your recommendation to go like 10% of 5% of one's savings in, or how does people go with these popular investors?
Well, it really depends. You know, there are people that think that they can manage investment by themselves, and they copy someone with just 10% or 5% or 50%. Other people are copying with 50%. It really depends of how much you know the capital markets, and sometimes, by the way, you feel that you know one aspect of capital markets, okay, let's say tech companies. You know how to analyze them, you know how to read about tech companies, but you want someone else that has the expertise of commodities, for instance. So you can copy this person and get the exposure of commodities by a person that has familiarity with commodities, with the commodity sector. So there is a lot of strategies how to use it.
Yeah, so you can actually, I mean, if somebody is not feeling very well, that could be with, say, technology. This could be an alternative to a classic technology fund.
Definitely, yeah, in some way, definitely, yes, yeah.
And
definitely.
then to what you promised me to learn me a little bit about also was the actual market. I think is it.
Let's talk about the reality, the life.
That would be nice. We have like 5-10 minutes, and just give us some insights. You're representing the global market today.
Yeah,
what did we learn last week, and what did you learn?
So it's an amazing timing, right? We are almost finishing 2024. We are after the U.S. election. And one thing that I always say to the people that I work with, we have maybe the most amazing job in the world, because every day comes with its own surprises, right? Okay? US election, we didn't know what will happen. Harris, Trump, Biden goes out, then Harris, and then who will win? So apparently it was Trump. I guess that we were all pretty much, Michael, I would say, overwhelmed about how apparently easy it was for Trump to win the presidency. And the market really liked it. Really liked it, because Trump is considered, rightfully or not, as pro-business. Okay? So we saw tech companies soaring. We saw cryptocurrencies jump, Bitcoin at all-time high this morning and continue to run. We saw finance sector running. And I would say, I don't want to say that it's not important who the president would be, but I want to share with you, ladies and gentlemen, another perspective related to presidency and the impact of who the president on capital markets, okay? So what we checked is the impact of who is the president of the United States in the previous 7 election campaigns in the US. You can see it in here that, except for 1 year, we'll get into it in a second, all of the last 7 campaigns, including the last one in 2024, so the year after, in light green, capital markets increased by 16%, okay? We had here, 1996, it was Clinton, and then George Bush the son, George Bush, 2004, Obama, Trump, #1, and Biden. So year after, S&P 500 increased, on average, 16%. Besides the year of 2000, because year after, market fell 23%. What happened the year after 2000? Do you remember a minor event in the US?
Yeah, crash, financial...
9/11?
Oh, yeah, that was it.
9/11. Yeah. So it was not expected, but we see that regardless of who the president is, Democrat or Republican, okay, market tend to increase a year after the election. This is one thing I wanted you to see. Secondly, which is even more amazing, is, you know, for those of you who saw the speech of Trump after he won the election last week, so he said many things, and I think he said to, it was either Robert Kennedy or Elon Musk, he said, I leave everything with you besides the black gold, which is oil. He's really for conservative or old energy sector, right? He's really pro-oil, while he's not really a fan of clean energy. So you could have expected, under Trump presidency, the first one, to see oil conservative sector going up, while under Biden, and the Democrats are more for clean energy, to see clean energy sector goes up. But what happened exactly? Not exactly what we forecasted. In this green line, you can see when it goes up, it's actually measure the ratio between clean energy sector companies and all energy. So whenever it goes up, it means that green energy sector outperform old energy, and when it goes down, it means that old energy does better than clean energy. Now, under first Trump presidency time, green energy soared 43% per year, outperformed gold energy, which is supposed to be the other way around, right? And when Biden was in the chair, so we saw that old energy increased 53% more than clean energy. So the question is, why? How come? We know that Trump is against clean energy, so we're supposed to see the opposite. So my answer is as follows. I think that, no disrespect to the president, this is over time. I'm not talking about the first few weeks, the first days, excitement in the markets and everything, but over the time, it's just one factor out of many, okay? So there are more factors, there are more variables which are even more important than who the president will be. We saw it in here, right? Regardless of the president, it goes up a year after. So also when it comes to sectors, okay? So there are more variables like market cycles. Okay, what happened here, by the way? Under Trump, the interest rate was really, really low. So clean energy really likes, in some way, lower interest rate, okay? And the opposite, under Biden's presidency, so because of the high, almost uncontrolled inflation, central banks increased interest rate. So that's why we see a burden on the shoulders of the green energy sector, and then it downperformed compared to the old energy. So there are more factors that we need to involve, not only who the president is, and not only what the agenda of the president, but also in terms of market cycles, interest rate, central banks' policies, okay? So there are many, many, many factors that over time are even more important than the question who the president would be. So take it as it is. Trump or Biden or Harris, now it's Trump, another 4 years. It will be very, very interesting to all of us, I guess. But when it comes to capital markets, take your eyes and look on other things as well. Look at what Fed are saying. Look at what ECB, central banks are saying.
If we look a year from now, which sectors are you looking into, like as the chief analyst with you? What sectors are you?
So first about the year 2025, we are just almost there. So in general, I would say that we are keep the optimistic. You talked about my previous colleagues, which I didn't understand the word because it's in Danish. But whatever they said, I agree. But you talked about optimistic and pessimistic. I got this part, okay? So I'm joining, and I think they said they're optimistic. So I'm with them. I already native Danish speaker. So yes, I'm also on the optimistic side, but careful, okay? We know that regardless of the president, we talk about the US economy. We know it's a cycle. We talk about either the US economy is towards soft landing or hard landing or recession. The main scenario is still something between soft landing and hard landing. Maybe a light recession, but we also know that we are expecting lower interest rate, which is something that will support the economy. And this is something that is good for the stock markets, which means that we are still, the main scenario is positive, but I'm not sure that we should expect the same results as we have seen in the last 2 years, 2023 and 2024. S&P now is plus 26% year to date. Last year, 19%, not talking about tech companies. So I'm not sure it will get that in 2025. It might be a more like a modest positive year, but still positive. Just a reminder, the last quarter that we saw with negative performance was Q3 of 2023. We might have the same quarter somewhere in 2025, maybe Q1. But in general, we are positive, but more careful, and also the importance of diversification. You asked about sectors. So tech companies, AI, supposed to continue, lead the board, although it's not cheap. So you need to be very diversified and to allocate the right stocks. Finance is okay as well. US in general is not cheap. Europe is much cheaper than the US market, but there comes the policy of Trump whether to have more tax, import tax. Yeah. So it's also part of the business that we need to take into consideration.
We're about to end, but actually with one of your colleagues, I saw that finance is actually also quite high on your, among your investors, like the finance sector, because maybe it is a huge sector in the US as well. So is that true, a fact that finance is stabilizing the tech risk, so to speak?
Yeah, so we are in the finance industry, so it's easy for us to recommend the finance. No, but seriously, by the way, finance is kind of a consensus, whether it was Harris or Trump, because we believe that the levels that finance is traded at the moment is pretty much reasonable compared to more expensive companies. And people sometimes say that lower interest rate sometimes goes against finance, but I think that to get it lower from 4.5 to 3.5 or 3, it's still manageable. It still has its margins. So we do think that finance should perform relatively well. This is usually not the sector that performs 30 or 70% a year, right? But the numbers are pretty much well. And also, mentioning Trump, he is considered to be less regulation-oriented, I would put it that way carefully. And this is something that can also support the finance industry.
And the last part would be then, if we look at the US, we look at Europe, and we look at Asia. Where do we need to look and not look for the next year or two?
Okay, so US mostly, yes, US is more expensive than the European economies, the European markets, but still, US should lead the investment, I would say. Europe is pretty much cheap and also not exactly the same. Okay, there was a tough year for the CAC in French compared to DAX that performed better, so it depends on the market. About Asia, China is something that you cannot expect. Although it's cheap, you cannot really expect. China had this year 1-2 months increasing 20% and then disappeared. So yes, in order to give some color, some flavor to the portfolio, you can add a bit of Asian stocks, but mostly should be European and, of course, mainly US-based.
That's a good, well, let's see if it's a good advice. Come back next year and we will learn if that's a good advice. Later this afternoon, we have the weather forecast for the stock market, so we will continue to elaborate on that. But, and also I would say that you and your colleagues are out in the hallway.
Yes, we are.
And you can always ask questions and get some help and maybe some advice as well. But Gil Shapira, thank you so much for coming.
Thank you very much.
And,
thank you.
Let's give him a hand.
Thank you. It was a pleasure.
Thank you.